I'd like to welcome Mark Borkowski, founder, president of Mercantile Mergers and Acquisitions Corporation. Mark's been helping to buy and sell businesses for more than 30 years. Mark has consummated more than 100 transactions over that time and has spoken at more than 30 conferences on M&A and private equity. Previously, he was a co-founder and president of electronic systems builder Simtech Automation Systems. He also had worked at HP Canada in various technical management positions. I'd like to welcome to the show, Mark Borkowski. Welcome, Mark.
Thank you very much, Alan. Actually, it's closer now to 400 transactions, and it'll be 36 years in February.
Wow, that's
yes.
Unbelievable.
Let's talk M&A.
That's it, and we've known each other for a while as well. So
25 years.
Great to have you on the show. Yeah, great to have you on the show.
Thank you, Alan.
Wanted to start off with just some general, a general question for those that are watching. With the IPO market, the public market, slow right now. Not a lot of companies, going public at this point in time. How is the private market doing? Are we seeing, a lot of private equity deals? How's the environment for buying and selling privately owned, smaller, mid-sized businesses? And, in these types of negotiations right now, where do you think things are going? Is the market looking good going forward?
Alan, there's an incredulous amount of money in the system. Private capital markets, not in the public markets. Let's go back to 2019. The U.S. Private Equity and Venture Capital Association, and in cooperation with the Canadian and the Association for Corporate Growth, declared that there was $1.2 trillion of what they referred to as dry powder to invest in private equity in the acquisition of private companies. COVID passed. Institutions still, you paid your pension fees, you paid your insurance fees. Today, as of May of this year, our association has declared that there is $2.3 trillion of dry powder. There are 40,000 plus private equity firms scouring the market looking for acquisitions. There is, the competition for companies, virtue of any size, that traditionally the private equity community were looking for companies doing $5 million of EBITDA. Well, guess what? The competition has scaled that down to any company earning $2 million of EBITDA is now on the radar. There are auctions going on, and valuations, by the way, are still pretty high. So there's a lot of money looking for very, very few good companies to acquire. The same thing applies to the lower mid-market, lower companies, smaller companies. Private sellers, unfortunately, don't seem to match with buyers that can actually buy their companies. Yes, there are 1,000 buyers for every company. Unfortunately, Alan, 995 of those are what we call LBO dreamers. They want to buy the company with the owner's money. They want them to take big vendor take-back notes, big earnouts. So many of these smaller companies that don't get good advice, don't connect with professionals, end up giving their businesses away or selling their business in a very undervalued manner. So lots of money looking for private companies, honestly.
So with all this money on the sidelines, then, would you say the seller has the upper hand at this point in time, or does the buyer have the upper hand when these negotiations start?
The seller is in control. Listen, when we do a distribution, we have a mandate to sell a company of any size. We'll do a wide distribution. If we send it out to a target group of 100 individuals, we will probably have 10 or 12 letters of intent today and trying to outbid each other. So the seller can sit back and say, it's not about the price, it's about the right fit, but there is a lot of interest. Sellers are in control because there's a lot of money and there's lots of buyers, good buyers. But there are, as I say, there are also what's called the search funders. They're looking for a deal. The universities say, go out and find a deal. Somebody will fund you. Probably not. There are what's called the independent sponsors. Those are individuals who are very talented, very skilled, but they come to you and say, we've got a backer. Okay, who's your backer? There are something called the pledge funds. People that will structure a deal, put it together, and then go out and try to find the financing and get a pledge forward. And then as I remain the LBO dreamers, which is a term that's been attributed to me, they clog up the system. Frankly, there are 4,000 private equity firms in the US and Canada that have at least $500 million of captive capital, and they're all looking to deploy. On an average week, Alan, there'll be half a dozen private equity firms here in Toronto running around downtown, interviewing with law firms, accounting firms, maybe in some sort of due diligence. So bottom line, sellers are in control.
Sellers are in control. And
yes, sir.
It makes sense, right? If all this money is out there chasing companies, obviously good potential companies to buy, it would make sense the seller would be in control. So
yes.
I think for those that are watching today, I think when you look at a business, you probably want to understand why the seller is selling. And what are you seeing most often? Are people selling their businesses today because they're maybe getting on in age and they can't handle the day-to-day management of a company? Or are you seeing people selling today more so because they're a little fearful that, a recession is perhaps on the horizon and they don't want to go through another difficult time in the short term? Why are small businesses or medium-sized businesses, why are they looking to sell today more often than not?
Alan, excellent question. All of the above. However, probably the most common one right now is the age of the entrepreneurs and their health status. Without giving you any phony story here, I'm working with two companies at the moment where the owners are in their mid 80s. These individuals have, for most part, these are owner operators that have started their businesses and have grown it from start to finish and have built them over 40, 50 years. These are iconic businesses that are profitable. Listen, owning a private business, the tax advantages of owning a private business that's making money is not easy to give up. But when you're 83 or 84 years of age, at some point you give up. Most businesses have rebounded back from COVID. So we're not seeing, with the exception of those in the hospitality industry, the retail industry, and some of the service industries, anybody that's distributing products, manufacturing, or providing anything of high value added content is doing well. So sellers are selling because, for the most part, they're up in age and they have no transition. They have nobody in the family that can take over the business. Why would you give up a business that's been in business for 50 years that in some cases, with $10 million of revenue brings you back, $2 million of EBITDA profit? That's what's out there. That's what owning a private business is about. That's why private businesses are a target today for all the capital. So most of them are up in age.
A lot of these businesses, obviously, it sounds like they don't have much of a succession plan, so they're looking to exit, and that's, I guess, where a lot of this money is. It can come in and hopefully bid up these businesses, at least for the business owner standpoint, and buy these businesses. I guess your comment at the end about different sectors of the market kind of takes me to my next question of what types of businesses or in what sectors are you seeing the most action? Where are you seeing what part of the economy are you seeing most businesses up for sale? And where, I guess, where have you been focused more so over the last few years coming out of COVID?
Okay, again, another good question. The hottest sector, without question, although it's not easily entered into, is the insurance industry. Anything insurance is smoking hot. I am currently involved in a consolidation. There's been a number of consolidations in the market. Gentleman who works with me was part of the consolidation of the veterinary clinic industry. A private equity firm out of Chicago made 107 acquisitions in 27 months. And they rolled these veterinary clinics all into one bundle and then sold it to a larger private equity community. My friend, Graham Rosenberg, started Dental Corp, and they acquired how many hundreds of dental practices, and they've consolidated. A hot industry. Today, the hottest market, and I'm personally involved, is in the heating, ventilating, and air conditioning market. The North American market, and again, it's plumbing, it's all the trades, fire, Electrical contracting, the trades are the new target. So there are large private equity firms, to my knowledge, about 41 of them, trying to consolidate this industry, trying to acquire these very profitable standalone businesses. Why? Well, North America didn't invest in training plumbers and electricians and heating and ventilating air conditioning technicians over the years. And these people are scarce. And frankly, these companies are very profitable. They're value added services. So that is the new drive at the moment. What will it'll be forward? We don't know. Hottest interest is manufacturing. Least interest, of course, is retail, hospitality. Um, Film production is down. But overall, the market is vibrant, Alan. Lots of money, nothing to buy.
Yeah, and so keeping with that thought, are you seeing more smaller businesses or more mid-sized businesses? Where are you seeing businesses that are available? I guess, what would be their size at this point?
I would tell you that right now, the greatest, I mean, everyone's looking for the companies that are doing $2 to $10 million of EBITDA profit, earnings before interest, taxes, depreciation, amortization, to define EBITDA. Below $1 million, $500,000, $200,000, $100,000 of earnings, those businesses are coming available again because most of these people don't have any succession. They're solid small businesses that have been established that owners don't know who to turn to. So they reach out to real estate agents who don't have a clue about selling a small business. It's a complicated process. So yes, below $1 million of EBITDA, there's a lot of interest, a lot of action, and I'm telling you, some incredible opportunities for corporate managers that want to leave corporate life, entrepreneurs that have sold a business, individuals that are dreaming about owning a business. Unfortunately, no guts, no glory. I mean, unless you have some money to put forward or a plan, these opportunities aren't available to them. But they are available to others. I mean, there's consolidators buying smaller companies, family offices. I mean, I've sold 5 companies, mid-size, to a family office in Eastern Ontario, not too far, who buy any business that's profitable. They roll it in, they support it. So there's all kinds of buyers, not just individuals.
So when someone's looking to acquire a business, obviously it depends on the type of business, what area of the market or the economy it's in. But what would you say would be the number one question to ask when you go to that initial meeting?
Oh,
Would you say that individuals should focus on perhaps the debt of that business or the product or service that they're offering or selling? Where would you advise people to focus their attention and get the most information and I guess ask those initial questions?
number one question. Number one question that I ask now and have asked for some time. How large is your largest customer? Listen, customer concentration has become a reality among small and mid-market companies. Customer concentration, when you have a customer that gives you 10% of your revenue and you lose that customer, textbook says you can recoup, you can stay alive. What we're seeing right now are organizations who have customer concentration of up to 50% of their revenue with one customer. You know what? A 50% customer can go away. And so these stories that these owners tell us, and those businesses are very difficult to sell because there's no confidence on the behalf of a buyer that that customer will stay. So the only way to do that deal is with a big earnout. So we are seeing probably in close to 40% of everything we're looking at, serious customer concentration. Groups that have 30, 40% with one customer. That's the first question we ask. Number 2, do you have a lease that's in good standing? And if we take this business over, are we going to be able to continue on in these facilities? Of course, we look at the debt, we look at the balance sheet, we look at the income statement, we look at the history. But at the end of the day, if there's one large customer that dictates their business, That's a red flag that is very difficult to get over.
Businesses that you're seeing today, obviously with interest rates as high as they are, accessing money has been difficult. A lot of businesses are carrying a lot of debt. So are you actually seeing businesses now up for sale that are carrying a lot of debt, or at least have a lot of debt on their books that I guess has to be discussed before a business can be acquired?
Absolutely. And it's not just bank debt, it's long-term debt. So when you look at this debt, so they've borrowed long-term debt to acquire equipment, machinery, other assets, and that debt is expensive. So that debt today, if you're looking at alternative financing, which a lot of companies need to reach out to because they've tapped out, you're looking at some sort of a long-term facility at 12 to 14%. So that is expensive debt that is obviously hinders the business. And a buyer coming in doesn't want to take that over. So then it becomes an issue of how do you pay it down and how do you get rid of it? Another form of debt, and becomes an issue, is owners loan their companies money. So they have outstanding shareholders loans or shareholders advances that at the time of a sale, they can't deal with because there's not enough cash for them to pay themselves out. So that becomes a bit of a dispute to say, hey, I had to loan my company during COVID $500,000. So it's sitting as a shareholder's loan. I want that money back. Well, that's your money to pay yourself back. And if they don't have the capital to do that. So all of those issues, yes, revolve around some form of debt. But the most discouraging one are groups that have bought equipment, taken on all kinds of other assets, and they've borrowed from the alternative lenders. They're there when you need them. But even worse are the groups that have used factoring or invoice discounting because they've had to. And we know the interest rates there are in excess of 20, 22, and up from there. So companies who want to stay alive have reached out. So selling these companies, when you're looking at their capital structure, is a challenge. All this debt either has to be taken over or paid out in advance. Hard to do.
Hard to do. I guess my last question before we wrap up, it would be if someone is interested in expanding their business or buying a new business today, and they need the help of a professional in general, would they seek the advice of a business broker? Where would they go? Who would they contact? Obviously, they could contact yourself, but in general, where does someone go? How do they start their search?
Honestly, I mean, there's a lot of people in our business, and we are generally not business brokers. Business brokers tend to be people who are real estate brokers that are selling sort of the mom and pop storefront stores. I would always reach out because you've got to screen people. I would reach out to your accountant. I would reach out to your lawyer. I'd have people reach out to other business people who've dealt with professionals or business and check references. Check references. I can provide people 100 references to say, this is who I am, this is what I've done. Again, there's a lot of, in our business today, to raise capital, you have to be a limited market dealer. You've got to post $50,000 in a trust to be a limited market dealer to raise capital for any transaction. Anybody can be an M&A broker and say, I'm in the M&A business. So on an annual basis, every year, I'll get 30 or 40 phone calls from people saying, I left the Bank of Montreal. I couldn't find a job. I'm an M&A broker. Welcome to the game. So check people's credentials, references, transactions that they've done. Check references, please. And so reach out to people who know.
Yeah, no, great advice. Great advice. I want to thank Mark. I want to thank you, Mark Borkowski. I want to thank you for coming on the show this afternoon. It's always a pleasure speaking to you and getting some insights into the M&A world and letting us all know what's going on, how much dry powder there is out there, how much money is sitting on the sidelines waiting to acquire small businesses. I think it's good for anyone who's perhaps looking to sell their business. And yeah, once again, thank you so much for being on the show.
Alan, thank you. No guts, no glory. If you're selling your business, call me first.
Excellent. Words to live by. Words to live by.
Thank you. Thank you, Alan.
Take care. Bye-bye.
Be well.